We need to talk about a Tesla stock. Tesla's valuation, is it worth buying? What did Elon Musk just say? What the future potentially holds? And there's a lot in this. First, let's review some clips here from Elon Musk's interview with Larry Kudlow. Now remember, Larry Kudlow was Mr. V-shaped recovery guy. And the first thing that I want to start with is I love that Elon starts with humor at the beginning of the interview, but boy, by the end of the interview, it starts feeling a little dark. Let me show you both of those clips, and you can kind of get a sense for the frustration that Elon is feeling at the Department of Governmental Efficiency, how it's potentially weighing on his other businesses, and the difference between expectation full of hope and enthusiasm and the reality of the nastiness of government and politics. I'll tell you, it makes me really second guess ever wanting to get involved in politics. It's pretty ugly.
They're setting fire to various Tesla charging stations near Boston. Shots were fired at a Tesla dealership in Oregon. Various nonviolent...
Shots fired, not a metaphor.
Shots fired, yes. Downtown New York, marching against the Tesla showroom. Your stock is way down. You've been criticized left and right.
But look on the right side.
I mean, why are you doing this?
Always look on the bright side of life.
Yes.
Okay, that's the happy opening, but look at how he transitions into the depressing portion.
Yeah.
You giving up your other stuff? I mean, how are you running your other businesses?
With great difficulty. Yeah, I mean...
But there's no turning back, you're saying?
I'm just here trying to make government more efficient, eliminate waste and fraud, and so far we're making good progress, actually.
Well, unfortunately, even this great progress at Doge is highly questionable. So first of all, that clip of the interview there really makes you question, what is Elon's involvement at Tesla anymore? Is he actually still able to lead and inspire? It's important for a leader to be there and inspire. Even if he can't be there every single day, it's obvious that he's working and busy. But if he's distracted on something that's actively hurting the business, it turns into something that demoralizes employees, which isn't good. It's totally fine if he's working on something that's helping the business, which is frankly what a lot of investors thought Elon's involvement with the government would be more regulatory clarity for things like full self-driving or Optimus robots or rockets in the future or, electric vehicles or green energy or whatever. Unfortunately, that optimism has been flipped on its head. We've given up all of the post-election Tesla stock rally. But it's more than that because people are starting to question, well, if Elon Musk is spending so much time on Doge and he's making mistakes there, is he also potentially overly optimistic on things at Tesla? I'll give you a couple of examples. The first example comes from this clip in the interview where Elon Musk says that the Biden administration was responsible for putting together a report that found $500 billion of fraud.
In fact, there was a report issued by the GAO, the Government Accountability Office, last year. So during the Biden administration, which estimated the federal government fraud to be $500 billion. Mm. So just to be clear, that's not a Trump administration thing, that's a Biden administration thing.
But wait a minute, Elon Musk, you said that this data was a Biden administration thing, not a Trump administration thing. No, that's not true. This is a report that was released during the Biden administration in 2024, but it actually covers a lot of Trump years here. See, Trump was elected in 2016, he took office in 2017. His second year in office was 2018, third year 2019, fourth year 2020. Okay? Then Biden had 21 and 22. That means 3/5 of the years of this fraud were actually Trump administration years. So wait a minute, Elon. Did you read the report? Now, there are going to be people that are like, Kevin, you're just trying to hate on Elon. No, I'm not. And honestly, it doesn't really matter if you think I'm trying to hate on him or not. It doesn't matter. I don't have shorts or longs on this. It doesn't matter here. I'm going to give you a valuation on Tesla stock in a moment. But I want to do this to provide you with perspective and insight because I think it's important. When Elon Musk says he has 100 people working at Doge and he can't read reports that he is quoting during media interviews correctly, then he loses credibility. And if he loses credibility by mispresenting facts that aren't even put together by his own staff of 100 people, he just can't even read the report correctly, then it hurts his credibility even more when it's compounded with, oh, how are things going at your other businesses? With great difficulty. It's the same thing as when we hear the same argument that Donald Trump says that, oh, there are 20 million people that are dead on Social Security. This has been studied and reviewed so many times. Yes, there are 20 million dead people on the Social Security rolls. That is, they're on the logs, but that's different than them receiving payments. The reason they're not removed from the logs is because it's been estimated it was cost the government $9 million to go through and individually remove those people that aren't receiving payments, but that are still on there and they're dead. So yes, there are dead names on the rolls. That doesn't mean they're getting paid. They're just being left there. But Donald Trump and Elon haven't put in the effort to dive into that research, apparently. And it's not that hard. You can research it yourself. But it's fine. Let's get past all this political mumbo-jumbo and let's get into something that is not divisive at all, like Ukraine and then Tesla's valuation. Oh, wait. Okay. Quickly, X was attacked today, and this really does relate to Tesla, okay? Because the more people target Elon Musk, the more people target Teslas. Teslas are targets for vandalism. People are beginning to get afraid to park their Tesla vehicles around different parts of the country, which is really bad because it's expensive to fix vandalism. Let's say you've wrapped Tesla and you really care for it and somebody keys the snot out of it or damages it. It could cost you $3,000, $4,000, $5,000. It might be excluded from your insurance coverage. You might have to try to fix the damage yourself or out of pocket. People just don't have that extra money lying around to fix these problems. Quick note, a lot of insurance policies do cover vandalism, but then it comes down to the deductible that you chose. If you chose a $5,000 deductible, you may as well fix that out of pocket. Even $1,000 is a big hit. We know that over 70% of Americans don't have an extra $1,000 available if an emergency were to pop up. The consumer is suffering today. People bought Teslas to save money, not to potentially have to pay more money. A crime is crime. It shouldn't be happening, but it is frustrating because so now all of a sudden trying to make an economic or cost-conscious decision and buy a money-saving car like a Tesla from the point of view of maintenance or gas savings turns into basically walking around with this exploding option for somebody to hit you with $3,000 to $5,000 of damage out of hate for Elon. That similar hate for Elon is what we just saw targeted against X, where X went down, at least on the East Coast and Midwest, via a cyber attack this morning. Elon Musk suggests that cyber attack originated from Ukrainian IP addresses.
There was a cyber attack on X today, which shut it down and may have been foreign sourced.
Yes.
It's a big story. You want to give us a moment on that?
Well, we're not sure exactly what happened, but there was a massive cyber attack to try to bring down the X system with IP addresses originating in the Ukraine area.
See, it's entirely possible that those Ukrainian IP addresses were actually just VPN addresses. So in other words, the attacks were funneled through a VPN, which everybody has access to these days. I mean, insert a VPN ad here. Okay, I don't actually have a VPN ad. But what's fascinating is it's entirely possible that Russia could have actually attacked X, made it look like it was coming from Ukraine to again get Elon pissed with Ukraine, getting him yelling at Trump to reduce funding for Ukraine. So it's sort of like, oh, let's manipulate the useful Elon. Let's get into Tesla's valuation. All right, so the first thing that you have to know is the PEG ratio has fallen for Tesla, which is nice. This is useful because it makes it a little bit less overvalued, right? EPS for 2025 is projected to be $2.88. However, revisions are coming down on Wall Street. Usually as a stock goes down, Wall Street estimates follow it down. This is unfortunate for a stock because it means institutions are really like you when your price is going up, and they don't like you when your price is going down. So there's somewhat of momentum in these price target changes that actually leads you in the wrong direction, right? It makes you buy when it's at all-time highs, it makes you sell when it's at lows. So just take some of these estimates with a grain of salt. Wall Street is estimating just $2.88 of projected EPS for 2025. Part of that is because there's the potential of having declining deliveries in 2025, which at this point, absent new models that are not just refreshes of things like the Model Y, it seems likely. Tesla's EPS growth thereafter should be pretty good, looking at potentially somewhere between 35.59% next year, then 28%, then 20%, then 40.26%. Over the next 4 years, that works out to about 29.86% in adjusted earnings per share growth per year. So if we take that growth, that average growth of, call it 30%, and divide it into the PE ratio that we have for Tesla now of 78.2-ish, you end up with a PEG ratio of just 2.63. Now, that's actually a relatively fair valuation for a service-based company. So let's say Tesla was, essentially a full self-driving company with robotaxis, and they were providing a service. A 2.63 multiple is entirely reasonable. A multiple of 1.67 would be more reasonable for a manufacturer of cars and energy products like solar products or inverters or otherwise. Enphase is selling for way cheaper than that. They're less than 1. But that would put their fair value at closer to $113 at these estimates, which is way lower than what we had in our previous numbers because the projections for Tesla's vehicle growth have plummeted and their sales growth, their EPS growth. This is problematic because it does make you wonder, okay, so at today's price, we're basically still fully pricing in FSD and at least some degree of robotaxis. But we don't know that artificial intelligence is going to be good enough to get us across that finish line. Are we going to have, Chevy Cruise style controllers trying to remote control Teslas if they break down or they miss an edge case scenario? Probably not, because this is supposed to be a vision-based system. Then you have artificial intelligence folks who say Tesla's not going to be able to solve this until we get to artificial general intelligence because there are too many edge case scenarios. And as we know, most Tesla drivers do take over driving the vehicle in edge case scenarios, which actually means you're providing less edge case scenario data to a lot of these training algos. Now, of course, you could use the human input and the recorded input from the human, but that seems to be less valuable than actually showing that the AI can handle the situation. Who knows? The point is, Tesla's valuation on a service and FSD basis has fallen to reasonable levels. This is a good thing. If you see Tesla as just a manufacturer, it's still overpriced by about a factor of 2. It should be about $113 now. If you see it as an FSD robo-taxi service, it's decently priced right now. It actually might be a good price to buy if that's your opinion, especially since you're not really incorporating into that price any of the future hope on Optimus robots, and you're incorporating a lot of hate, the swastika cars that are getting graffitied, shots fired against Tesla stores, Cybertrucks, getting lit ablaze. It's a lot of pain. Let's get into some more fundamentals and financials. All right, fundamentals. From a fundamental point of view, the company has a lot of cash. Their margins have obviously compressed substantially. I mean, if you look over here, we can see total revenues in 2024 were about $97 billion. That's quite a lot of money. Their gross profit was about $17 billion. Well, in 2022, their revenues were actually about $16 billion lower, and their gross profit was about $3 billion higher. Well, this is what happens when there's margin compression. Okay, we've already seen that margin compression. The stock has already acknowledged that. We know margin compression occurs when there are companies that have a lack of pricing power. It's actually one of the inspiring factors that we hadn't talked about before that I closed an ETF that I had, which I started at the bottom of the market in November of 2022, a great time to start, return somewhere around 24-25% for investors. Now, close that in February because I'm looking going, there are just no true pricing power opportunities walking into a potential recession. Now, all of a sudden, you've got NASDAQ selling off, you've got the S&P 500 selling off, you've got Tesla down 15-something%, and so it's no surprise. I mean, look at this timing. I wish I had an option on this timing. Look at this timing. Meet Kevin pricing power ETF year to date actually had a return, whereas the NASDAQ lost 7% because it just falls off, everything fell off a cliff at the end or at the beginning of March here, which in fairness, we have been warning could happen. We've been saying this for many months now that we need to watch the beginning of the year data to see if hope actually turns into reality. And so far that hope isn't actually turning into reality. But what else do we have in terms of the financials? Well, I want to say the balance sheet is really strong. You should already know this about Tesla. The balance sheet is fantastic. You can't say anything negative about this. You've got $36.5 billion in cash, $12 billion of inventory, $4 billion of receivables. No cash issue here because you only have 25.5 in payables. So you've got free cash here. If I add this together here, 36.5 plus 12 plus 4, obviously inventory and receivables aren't cash, so we need to discount those. Let's discount that by about 4. So say they have 48.5 billion of free cash. We've got 25.5 of total current liabilities due by the end of the year. That leaves us about $23 billion of free cash. Well, we could build a couple gigafactories with that. Like the cash Tesla has available is great. This is a fantastic situation because it makes it less likely that Tesla's going to be forced to raise money in the stock market, to issue. Now, if you look at their cash flow statement, you can see on cash flows, they certainly create less cash flow than they previously did. Look at 2022, they brought in cash from investing activities of about cash from operating activities of about $14.7 billion. And then they spent about 7 on capital expenditures. So that's like over $7 billion of free cash flow. It's amazing. You can see that's narrowed for the entire year. That's narrowed to about $3 billion. So it's certainly compressed quite a bit. It's about $3.5 billion. But still, that's a 50% compression in free cash flow. Again, they don't need it, so it's okay. It gives them cushion to sell cars for less money and keep those volumes up. The problem is, estimates for Tesla deliveries aren't doing so freaking hot. Now, a lot of people are referring to the Model Y refresh as slowing down some of these deliveries. And a lot of people refer to Australia as potentially a sign that there's infinite demand for Teslas because you can't get the rear-wheel drive Model Y. We went into this in detail in the course member live stream this morning, so I don't want to go into terrible detail right now. But it's worth noting that there are exchange rate issues. There are luxury vehicle taxes that you have to deal with. There are GSTs you have to deal with, stamp duties you have to deal with. BYD is actually a competitor in the Australian market as well. It's also worth noting that you have cars that need to be configured to drive on the left side of the road, which is a little bit more challenging to manufacture for. Australian and New Zealand clean car discounts expired. So a lot of things actually hurting demand for Teslas overall in Australia, leading current numbers for Australia to show that Tesla sales are down 71% year over year. But why are the Model Ys sold out then? Well, mostly because as they introduced the rear wheel model as available in Australia and manufactured in China, what you found was Tesla threw in almost every incentive under the sun. Lowest priced vehicle, free supercharging, and other benefits, including full self-driving, to make it a steal of a deal. It's kind of like a pull forward of demand and an expiring coupon code, essentially, to try to get people excited. Speaking of coupon code, there's no coupon code right now, but we are listening to your feedback. Some folks are looking for a less expensive, maybe pay over time, or just a monthly subscription service where you can kind of sign up, and if you don't like the courses, the course member live streams, the Alpha Port or whatever, you could just cancel, right? So like you pay 1 month at a time, or maybe you pay upfront for 6 months or whatever, right? And so that way it's a lot more manageable in these harder times to be part of the research that we do together every morning in the course member live streams. So anyway, this idea that Australian demand is such a sign of global demand just doesn't line up with the data. It doesn't line up with the data in Europe. It doesn't line up with the data that we're seeing in California with registrations, and it just doesn't align with the estimates that we're seeing from people like Troy Teslike. Troy Teslike just wrote just about a week ago that Tesla deliveries this quarter are expected to be the lowest that they have been in the past 10 quarters. Troy Teslike also suggests that Tesla's facing severe competition in China, with brands such as Xiaomi having 34 to 37 week wait times for their model, while their production is running at all-time highs for the Xiaomi vehicles. While at the same time, the Model Y Juniper model, it has a little bit of a wait, but it's like 2 to 4 weeks. not great. So there's something else potentially driving competition in China. The Wall Street Journal had a piece out on this where they argue that when it comes to buying cars in China, people are not brand loyalists. They just pick the cheapest car that gives them the best bells and whistles. A lot of competition from BYD and others. In fact, Bloomberg Surveillance had a research report that Tesla may have lost about 26% in brand value after Elon Musk got involved with his government affairs. And unfortunately, that is a shot heard around the world. Okay, now let's get into the spreadsheet. We've talked about the spreadsheet many times before in the past, and I have not updated it since we last did our update. And what you'll see in my last update is I give them a PEG ratio multiple of about 1.67, which is a PE ratio of 50 and about a 30% growth rate. That gives them a reasonable price target for the end of 2026 of 244. But this is based on 3 million vehicles to be delivered in 2026. If I make the present value, oh, that's funny, the present value I wrote last time was, yeah, you should aim for $200. Well, now it's about $221 at the time of this recording. This projection would only give you about a 5% return on investing in the stock for the next 2 years. Well, through the end of 2026, so slightly less than 2 years. That's a 5% compounded return, that is. Okay, but that's based on 3 million vehicle sales. The problem is if we're at negative growth this year in 2025 and we only end up getting, 1,750 cars, 1,750,000 cars, then we're at a slight negative in terms of production. How are we going to go from 1,750 to 3 million? That doesn't seem realistic anymore because that would be 71% growth. So let's go with 1,750, 1.75 million vehicles produced. Let's give them the assumption that we're going to go back to 30% growth, 1.3. Okay, cool. Well, 1.3 would look like 275, so 2,275,000 cars produced. Okay, if we leave everything else the same, 18% margin, energy sales still massive at 26 billion. This is a huge bump, by the way. We'll still leave margins that we have as set for some of these other items. You can pause and see that on screen. That would bring Tesla down to a valuation of about $203. So this is obviously significantly higher than just taking a PEG ratio multiple of the Wall Street estimates, right? This is a rebuilding of the estimates based on how many vehicles we think they could deliver. That said, it relies on this boost in energy. See, if I take this energy boost back down to about 15 billion because, we're in a recessionary time, all of a sudden the future value at the end of 2026 might only be about $170. And if we just can't get to vehicle growth and we should be happy with getting to just 2 million vehicles a year without a price reduction, you're sitting at about 155. To really go bullish here, what you need is the revenue boost from energies, $26 billion of this, which is very bullish. That doesn't assume a recession. And you need some lower cost vehicle that's really going to get us somewhere to maybe like 4 million vehicles produced, which would be fantastic. And who knows, maybe that'll come out. So far, it seems like we're just getting lower cost refresh versions, like a refresh Model Y, which we've already seen, or a refresh Model S or X at a lower price. Basically ways of trying to get pricing power back, which is hard to do in this sort of environment when people don't have extra capital or money for capital expenditures. What do you end up with? Well, then you could get to a $300 price target again, which again is much more reasonable than some of the insane numbers that Tesla stock has been trading for after the Trump rally. But the Trump rally we knew was detached from fundamentals. Now we're actually having a fundamental discussion again. So the numbers are actually such that they're getting juicier again. They're still rich, but they're way better than where they were. Again, it just comes down to what do you think? Do you think we can double the number of vehicles Tesla's going to produce by 2026? Or the other thing that you do is you go to let's say 2030 and you assume that they're going to sell, 5 million robocabs at, some kind of large margin, larger than they have now. You go to maybe instead of an 82% expense ratio, you go with an expense ratio of only, let's go with 78. This will give you 22% profit margins, high profit margin cars, assuming there's not substantial competition and everybody wants this. Hell, you know what? Go even to 75, okay? So the expenses are only 75% to produce the car. So if they sell a car for $30,000 a RoboCab, their expenses would be $22,500 and their profit would be $7,500, including the FSD and everything. People throw this into the fleet. Okay, great. Now we can get to a $500 price target with 5 million vehicles sold by 2030 and a 25% margin. You know, now you want to get really excited. Throw some Tesla bot revenue in here. So let's assume they have a 30% margin on the Optimus robot, which would be great. They sell $34 billion of Tesla bots, and they have expenses of $24 billion. That gives them an extra 10 billies of income, basically, which is absolutely fantastic, right? So let's sum this all up here. Let's see, total expenses. Let's make sure we have our total expenses in here. Let's make sure we have total revenues to include the Tesla bot. There we go. So total revenues now include the Tesla bot we added. Total expenses now include the 30% margin over on the Optimus bot right here. And we scroll down, what do we get to? We get to about a $600 target. You know, and that's on a manufacturing multiple. So if you want to go to a service multiple, sure, I could take this to the moon and you can make some delicious returns between now and 2030. But you could see there's a lot of real work to be done here. We're not in a place yet where we have Optimus robots for sale. How am I supposed to project to 2030? You know, what if we can't solve the FSD problem? What if we can't get Tesla sales up in the near term? It's just going to take a while to see where these things move. Now, I'm optimistic on the Tesla bot, but near term, Wall Street's going to have a headache trying to do valuations on this when their sales are still negative for their vehicles, and the margins are not this high. So that does become a little bit more challenging. And that is what keeps Tesla stock probably, at $200, at closer to a 2026 price target. Got a couple of years to go through for that. Now, how would Tesla respond in a recession? Well, in 2022, there were plenty of jobs available. And if we had a real recession in 22, my thesis was that more people could buy Teslas because rates would be lower and higher income white collar workers would have plenty of discretionary income to buy Teslas. The problem that came after that was we ended up having 2 more years, 2.5, 3 or more. Well, it's actually probably more like 3 years of growth now up to the beginning of 2025 here. And so the recession's basically coming 3 years later after people have spent all their extra discretionary excess savings, and the jobs market is harder now. This means Tesla is now actually uniquely more at risk of a recession. So how do you buy Tesla? Well, my take is if you don't think there's a recession, you could probably think about buying the dip for that longer term Optimus future and maybe full self-driving future. But there are a lot of risks that come with that, including AI development. Can we actually get to that, or do we have to wait for AGI, which we're nowhere close to? Alternatively, if we have a recession, you probably have to ask yourself, how much is a recession actually being priced in? And right now, that answer seems to be very low. Anyway, these are just some of my thoughts on Tesla stock. Hopefully it's helpful to you, and we'll see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.